Hey, what's going on, guys? Today I wanted to share how to read a crypto to crypto chart. Someone asked about it, and I think this is a really necessary skill if you're just getting started in DeFi or in crypto. You have to be able to compare the relative strength of different assets, right? You need to know, okay, is an asset like ETH, is it really cheap compared to BTC, or is BTC really cheap compared to ETH, right? So if we look at a crypto to crypto chart, that's basically how we could tell. And this is really useful for TradFi investing as well, where you could be comparing different assets like gold to different assets like stocks, right? And like always, this is not financial advice. I'm just sharing what has helped me and hopefully it helps you. So the first thing I'll go over is the base and quote asset, what it is and why it's important. And then I'll also go over how to actually read these charts, a few examples, and why I prefer using larger caps as a quote asset. And lastly, I will share my investment strategy when I'm pairing crypto to crypto pools. So the first thing is understanding base and quote asset, right? If you're looking at something like ETH to USD, the base asset is Ethereum and the quote asset is USD. So the quote is basically whatever is behind, right? So for ETH BTC, the base asset is ETH and the quote asset is BTC. Sol ETH, Sol is the base asset and ETH is the quote asset, right? So let's start from the US dollar chart here. Basically, what this shows is that ETH, the asset, is being traded in US dollar terms, right? So one ETH is currently trading at $3,093. And when this price goes up to, let's say, 5,000, then it just means that ETH is gaining value relative to the US dollar, right? So oftentimes, when I'm looking at a crypto to crypto chart, I'm trying to bet that the base asset is going to outpace that quote asset. If my goal is to accumulate US dollar value, then you want to try to buy ETH at a cheaper price, right? So if ETH USD is trading at a low price, we want to get in. And if ETH USD is trading at a higher price, then that's a potential area where we should be looking to secure some profits. And even if you're yield farming, you could, for example, use some fees to sell into some USD when prices are high, right? Or you could do stuff like hedging. When prices are high, that's a great bet to start hedging. But when prices are cheap, that's when you should be actually accumulating, right? So that's basically the base and quote asset. And it's really important that you understand that basic. So now let's hop to ETH BTC, right? And I'm going to explain it in the same words that I just explained. So ETH is a base asset now, and then BTC is a core asset, right? And for a lot of different assets, you could also go to here, like for ETH. And if you're on TradingView, you could change this currency to BTC, right? And it's going to basically show you that ETH to BTC chart. What this basically means is that ETH is being priced in BTC terms, right? So if this chart goes up, it means ETH is going to be gaining value against Bitcoin because right now, what you can see is that one ETH is worth about 0.033942. So that's the amount of Bitcoin I would need to buy one ETH. And then if price goes all the way up here to, let's say, 0.08, then I would need zero point zero 0.08 Bitcoin to swap to one ETH, right? So that just means that ETH is now more expensive relative to Bitcoin because it takes me more Bitcoin to swap into ETH, right? And then it works in reverse too if prices go down to 0.02. Now, ETH is really cheap compared to Bitcoin, and I could swap much more Bitcoin into ETH, right? For example, at 0.02, I have one Bitcoin, I could buy like 50 ETH, right? Compared to, let's say it's at like zero point 0.1, let's just say. So if I have one Bitcoin and I want to buy ETH, I could only buy basically 10 ETH at this price point, right? So when we are yield farming, this is really, really important because if your goal is to accumulate Bitcoin with this type of LP where you're pairing ETH and BTC, you typically want the chart to go up, right? Because what is happening is that if ETH is gaining value against Bitcoin in the LP and you set a wide enough range to stay in range, is that ETH is being converted to BTC on the way up. And let's just say your entry is at the current price, right? So if it's above the current price, your ETH is being sold to BTC at a higher price than your entry. So if you enter right now at 0.034 and ETH BTC goes to 0.07, then you're going to be actually gaining BTC value in the LP. So that's the ideal case scenario. And of course, we never know if that's going to happen or not. If you look back in the last cycle, if you got in at 0.03, you think that's the bottom, right? But then prices do drop below that. That's part of the risk of investing because you never know the future, right? But getting in down here is still much better than getting in up there, right? A lot of yield farmers, they don't know how to read this chart. So then they just set a range where they could try to stay in range and get the max APR that they could, right? But what's going to happen is, let's just say you yield farm here, ETH BTC in a tight range, maybe something like this, right? 0.06 to 0.085. This is exactly what a lot of yield farmers do. And then what's going to happen is that if ETH BTC declines, you're going to be left with a ton of ETH at the bottom price, right? And then what's going to happen is if ETH is losing value against Bitcoin as the prices trend down, you're going to be bleeding the Bitcoin value of your portfolio and in that LP position, right? So when you first start, your position might be worth like 1 BTC. And then you're going to find that over time, maybe that 1 BTC turned to zero point 0.4 BTC, right? So then like, what's the point of yield farming? If you're losing money over time, you might as well just buy and hold, right? And this is a reality of a lot of strategies. And especially if you don't know how to LP or like when is the best time to enter, when is the best time to exit, right? So let's take a look at another example here. If we are looking at different altcoins like Pendle to ETH, now Pendle is the base asset, right? And currently it's on the US dollar chart. So USD is the quote asset. And if I switch to ETH here, if ETH is a quote asset, again, at this current price, it just means that it would take this amount, 0.000689 ETH, to buy one Pendle token, right? And then if prices go up to 0.002, it means that I would need that amount of ETH to actually buy Pendle. So it means that Pendle is more expensive if this prices go up, right? And if you're buying and selling or you're LPing different altcoins, you want to be buying when prices are cheap, and then you want to be selling a bit when prices are more expensive, right? And so one of my core strategies for LPing altcoins is that I just try to find entry points where prices are cheap. I set a wider range. So this is actually one of my entry here. I entered at 0.001. And of course, you can see that prices doesn't really act always like what you want it to, right? Like prices do move against you. And that's part, again, of the risk that you're investing. But again, at the same time, when I'm buying into these assets, I am trying to get the best price here. If I were to enter into LP all the way up here or even middle of the range, the risk and reward for that particular strategy is not going to be as great as entering all the way down here, right? I've covered a bunch of simulation videos on how you could deploy crypto to crypto LPs. We're also building a bunch of tools at Drippy to make it easier to use and easier to understand how to actually simulate this. But basically, the main idea is if Pendle starts to outperform ETH, what I can do then is I could close my position into ETH to lock in that profit, right? That's how I was able to stack a lot of ETH back in 2024 and early 2025. When these assets are outperforming ETH, I'm closing these assets into ETH, right? And of course, if these assets just decline and maybe pop out of range, you got to make sure that you're comfortable with the underlying asset because you're now left with that asset, right? So that's the really real risk when it comes to providing liquidity for crypto to crypto pairs. The benefit is it's really good for accumulating these two assets. So if you believe in Pendle and ETH anyway, then one of the best ways to actually invest into Pendle is to just pair it with ETH in a concentrated LPs, right? But the problem that most investors run into is that they're not actually comfortable with the underlying asset, or they just don't want to hold that asset in the first place, right? So you should not be LPing these assets and using these strategies if you don't actually want to hold these assets. Because the worst case scenario, again, is that you're going to be left with like one or the other asset. That's the worst that could happen. And these assets could decline in US dollar value, right? And that's how you would lose money over time if these assets never recover in price. But if these assets are something that you want to buy anyway, then you're taking risk anyway. Why not earn some yield and also get a better risk and reward from it, right? That's a really simple strategy that you could use that have made me a ton of money over time. But of course, I've also lost a ton of money LPing assets that kind of just bled out over time, right? So that's kind of what you want to also check for when you're comparing different assets. And when the market is really bad, a lot of these assets do kind of bleed against the larger caps. That's why if you are too heavily into altcoins, your portfolio could draw down pretty heavily. So, and I've recently entered into an Arrow and ETH LP. I don't know how it's going to do because a lot of altcoins are just pretty weak right now, right? But I think that's a great time to buy when everyone is bearish and they think that altcoins are not worth investing anymore. Then that's when I am just accumulating. And you can see here that the price of Arrow relative to ETH is quite cheap, right? At least relative to the historical price action. That is the best time to be looking for entries. And of course, I am reserving some capital on the side to deploy more if prices kind of just drift down, right? And we always got to kind of keep in mind that prices could always drift down. But again, if I enter down here, the risk and reward is much greater, and I'm able to capture much more ETH gains if Arrow is able to outperform ETH. And of course, a lot of the profit and loss is based on the market and the underlying asset as well. Like you can have the best yield farming strategies, but then if the assets don't perform well, or if we're just in a weak market, then you kind of just need to deal with it, especially if you're not doing hedging to kind of protect your downside, right? And I personally don't like to hedge too much if I'm trying to get the maximum upside, because when you hedge, you can't really get the maximum upside, right? One of the most simple way to hedge for me personally is just making sure that I have solid financials. I am making a good income, and then my expenses are kind of controlled. And then also I'm diversifying into other assets, like for example, REITs, gold, stocks, and stuff like that. That's kind of how I protect myself. And then I'm using crypto as like a tool to kind of multiply my wealth if I could get these assets that are appreciating in value more rapidly, right? And I'm not even talking about altcoins in general, right? I'm talking about stuff like accumulating ETH, accumulating Bitcoin. I personally don't like to hedge a lot of these major assets like Bitcoin and ETH simply because, again, you're basically capping your upside, right? Unless, let's say, ETH goes up to like $5,000, $7,000, maybe I would consider using some hedging strategies. But currently, in my opinion, this is a good price to start accumulating, right? And it all depends on your timeline and investment strategy as well. So I think I've gone on long enough. Hopefully, this video was helpful. If you want to learn more about yield farming, I've made a ton of videos on my channel. Feel free to check that out. I'll catch you on the next one.